Hello and welcome. You're watching Markets Today. I'm Sakshi Patra, and this is where we discuss everything about the stock markets, the way the trade panned out in trade, what were the closing levels like, and what can you expect from the markets as we move forward from here. Well, it was a day where another 1,000 point of a fall is what we witnessed on the Sensex. In fact, the benchmark indices, Sensex and the Nifty, have slipped to a fresh 52-week low today, all led by the US Federal Reserve 75 basis points hike and the commentary by several experts talking about how higher tightening, aggressive rate hikes could actually push US into recession. So those fears really gripped the sentiments across the globe. Remember, we had seen right at the opening levels, the markets had actually opened up in the green, not really fearing about the kind of 75 basis point of a rate hike that had come from the US Fed overnight. Of course, this was the highest rate of highest rate increase that we have seen since 1994 of November, in 28 years. But all of that seemed to be quite in factoring in. But slowly and gradually, the markets gave up all those initial gains and in fact slipped into the red. In fact, when you talk about the markets, they have lost. They've stretched their losing streak for the fifth consecutive session today. The Sensex plunging over 1,000 points, or about 2% in trade, to end the day at 51,570. The Nifty also tanked more than 300 points to close the day at 15,386. The broader markets, the mid and small caps, also fell in line with the benchmarks, Midcap 100 index and the Small Cap 100 index slipping 2 and 3% in trade. What's more is that the Nifty Midcap 100 index and the Nifty Bank Index both have come into the bear territory. What does it mean to be in a bear territory? Both these indices have slipped over 20% from their record high levels. So, yes, parts of the markets are in the bear territory right now, causing some more flutter and fear among the investors community. So, what were the factors that led to this sharp fall today? Fed rate hike, as I told you. Apart from this, Bank of England may also hike rates. Bank of England is likely to follow the US Federal Reserve's example and hike the interest rates in Thursday's policy meeting to control inflation. The hike, if it takes place, would be the fifth rate hike in a row and would be at the cost of growth and the weakening currency. So it's not just one country really dealing with inflation, taking these aggressive measures of rate hikes. It is a pan global event happening. US is doing so. Bank of England is expected to do so. We also saw the Australian banks doing so. The Indian banks have been doing so. So large countries are actually going forward to this space. Now, altogether, could this push the world or at least the major economies, developed economies, into the red and into recession? That's something that has been worrying the markets. Global markets corrected right after that throughout the day. So that also caused the pressure in the Indian markets. Oil prices remain elevated amid the tight supply after the Fed's rate hike, raising fears of recession and the shocking supply as well. The FII selling continues as well. For the ninth consecutive month, we have seen the FIs who've been pulling out money and selling their Indian equities in the last 9 odd months. They have already net sold more than 31,000 crore rupees worth of shares or so far in the month of June, on top of the 2.2 lakh crore rupees of selling in the previous 5 or 6 odd months as well. The DIs have been managing to support the markets, but how long and how much will they be able to do so going forward is another concern. Stocks are under pressure. Technical view also suggests that the markets breaking below the 52-week low could actually extend correction even going forward and create some more volatility going forward from here. The India VIX, or the volatility index, has climbed above the 28 levels intraday before recovering to the trade at 22.88. So this kind of volatility levels are also concerning at this point in time. So, in terms of stocks and sectors that were in focus in today's trading session, let me just help you give you a broad idea. The Nifty, remember, 15,360 is where it ended at, over 2% cut. For the Nifty sectors, all the sectors ended in the red. Most of the sectors were down 2.5%, with the maximum fall coming in for the metals pack. That was down 5.24%. Huge sheen being ripped off the metal stocks today. 3.2% index percent down for the media index. The IT stocks were down by 2.5%, almost 3% gone for the realty space too. Of the 50 stocks of the Nifty index, 48 stocks ended in the red, with just two advances, Nestle and Britannia. Perhaps investors really finding or hiding place in the conservative sectors in the defensive space in the FMCG sectors right here. But Hindalco 7% down, Tata Steel down 6%, ONGC, Coal India, Tata Motors, all of them down by over 5% in today's trading session. As we move forward, we'll just have to keep an eye out on how the global markets really trade overnight and in the early morning trading session. If there is any hope for any bounce back from these levels or so, all of those things will be important to track. I'll keep getting you all those updates from across the world and from the Indian equity market. So do stay tuned on to Business Today TV to catch all these updates.